Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now.
Virgin Galactic continues to do all the right things from an operational perspective. They're now on a monthly cadence for their flights into space. There's been great reviews. Safety has been great for their products, but the stock does not seem to be going anywhere. Even just in the last few months, shares are down over 50%. And I think the company really needs to get desperate to show exactly what they're going to do to get to free cash flow positive for investors. And that is a few years down the road. So the company has some cash on the balance sheet, but it also has to spend a ton of money to build out its next generation Delta class spacecraft. So I want to get to some of the numbers today, talk about why the stock has been trending lower, and then go through some of the options that the company has for financing this business long term. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I want to just go through a quick overview of the performance of Virgin Galactic stock because I think this is really jarring. You can see I'm recording this midday on Tuesday, and the stock's actually having a really great day, but this has not been the case very often lately. Shares have dropped 50% just over the last 6 months. And if we pull this back to a year, down 65%. So the market just doesn't like what they're seeing. And there's a big risk off trade. One of the things I think is interesting here is the market cap of Virgin Galactic is $640 million. They have almost $1 billion in cash on the balance sheet. So from a financial perspective, just purely finance, it would actually be better to just return that cash to shareholders and shut the company down. They're not going to do that. But I think the stock price really shows how desperate a situation Virgin Galactic is in. And investors questioning this is really understandable because what we have seen from management is that they're going to be burning cash for the foreseeable future. And the pace is really astonishing. This is the guidance for the third and fourth quarter. This has been pretty similar the last few quarters. So a pace of about $500 million per year that Virgin Galactic is going to be burning through. Then I'm going to go over here to the press release for the second quarter earnings. You can see that there's $980 million of cash on the balance sheet. That's that big cash level I was talking about. So that's nearly 2 years of cash on the balance sheet if nothing else changed. But there is something that is going to change in a big way. That is the company's development of the Delta class spacecraft. This is the spacecraft that is going to move to 6 seats instead of 4 today. Still two pilots in the front. And then eventually they get to the point where the cost per seat is going to be $450,000. Based on this projection, and this was given during the first quarter conference call, management has said that the cost to operate each flight is going to be about $400,000. These flights are going to be once a week. So the margin that they're going to make on each flight is nearly $2 million. Given the $50 to $60 million cost to build each spacecraft, that means we're talking about a 6-month payback. This is really attractive. See this being a great cash flow company. A single spacecraft can generate as much as $100 million in gross margin per year. The problem is you have to build them, test them, and then get them into operations. And that's the current challenge for Virgin Galactic. Right now, the spacecraft that they're using is operating once a month. They're also taking the early people that signed up for their space flights, and those people signed up for a couple $100,000. So they're looking at about $1 million to $2 million in revenue per quarter, not per flight. That means there's basically no gross margin coming into the business until Virgin Galactic gets these Delta spacecraft off the ground. They're designing them right now. Testing is going to begin next year, so 2024. Further test flights in 2025. We don't expect real operations to begin until 2026. And again, I mentioned that this is a spacecraft that could generate about $100 million in gross margin per year, but Virgin Galactic is still burning about $500 million. So you need to have more than one of these. You need to have 5, 6, 7, 8 of these just to get to break even on a cash flow basis. So we're really talking about 2027, 2028, maybe even 2029 before Virgin Galactic is going to be anywhere near cash flow positive. So that's why as I started with, there's really a ton of pressure on the balance sheet because there's multiple years here where there's a cash void that needs to be filled. I've calculated that Virgin Galactic is going to need about $2 billion of additional capital, on top of what they have now to get through this investment period with a Delta class spacecraft. So, what are the options there? Because I think that's what investors need to start thinking about. And with a third quarter earnings result coming out, we need to hear more about how they're going to finance this future. The main way that Virgin Galactic has financed their business so far is just by selling more debt. They did that even in the second quarter, raising a couple $100 million, possible that they sold even more in the third quarter. So that's definitely one way that things could go. But with a stock price in the single digits, that's going to be extremely dilutive to current shareholders and could even push the stock lower. So definitely something that management could do, likely something we would like to, but really something we would like to have seen them do when the stock price was much, much higher. Right now, you're actually raising cash at a lower valuation than the cash on your balance sheet. So you're actually devaluing the company if you're selling shares right now. So I think that's going to be a really challenging way to raise capital. The second would be to potentially do some sort of a debt sale. Higher risk companies like this would often do something like a convertible debt offering. That means that investors buy debt, but there's a very low interest rate associated with that debt. And the upside for them is that that debt converts into stock at a predefined price. So what you're basically doing is buying a call option, but your downside is protected as an investor. This is something that a lot of growth companies do. Again, you would like to do this at a higher valuation, so it's not so dilutive. But if there was a convertible debt offering, you might say, hey, we're going to have a 0.5% interest rate on this debt. It's going to mature in 2030, and the convertible price is going to be $2.50 or $3 per share. So if Virgin Galactic does get to that positive free cash flow, does get to sustainable operations, the stock would hopefully be much, much higher than that. So this convertible debt offering would be attractive to investors. That is a likely option. I don't think it's very likely that Virgin Galactic goes out and raises traditional debt that's going to come with something like a 10, 11, 12% interest rate. They just don't have the cash flow to be able to do that. So a convertible debt offering is going to be an attractive option. The third one, and I think that we really need to hear more about, is partners. Can Virgin Galactic partner with some of its suppliers? These are suppliers that are going to need Virgin Galactic to actually pay their bills, and they're not going to be able to pay their bills if they go out of business in the process. So does some of these companies investing in Virgin Galactic make a little bit of sense? There are a few potential options that make a lot of sense. One is the suppliers for the Delta spacecraft, and that the two main suppliers there are Bell Textron and Carbon Aerospace. So these are companies that are going to be building key subassemblies for the spacecraft, and then Virgin Galactic is going to put those together. The other company that plays a really key role in Virgin Galactic business is Boeing. That's through their subsidiary Aurora. They're going to be building the mothership. So there's a new mothership. That's the ship that holds up the spacecraft, takes it up to 50,000 feet, and then the spacecraft drops and rockets into space. So that ship is going to be built by Aurora Flight Sciences, and that is a company that's owned by Boeing. So Boeing is another company that could potentially invest a few $100 million into Virgin Galactic. And the benefit for them is they would actually get a lot of that money back when Virgin Galactic pays for that mothership. These kind of partnerships have been used a lot in the past, and especially in the aerospace business. You see this in those vertical takeoff helicopter planes right now. They're getting both defense contracts and then partnerships. So those are a couple of options for the company raising money. But this is really getting to a desperation point. Virgin Galactic can't just keep burning $500 million a year and not have enough money to actually build enough Delta class spacecrafts to get to free cash flow positive, or the stock is just going to eventually grind to zero. So I think this is the moment that management really needs to get desperate. Interest rates are rising. There's becoming better and better options for investors' money that's lower risk than something like Virgin Galactic. So you have to give a path to 5, 6, 7 years from now in this high potential business, because if you can't get there, then nobody's going to invest in it. And this is really the chicken and egg situation that Virgin Galactic finds itself in. I really hope that they find a way out. I have a small position in Virgin Galactic, the stock, and it has not done well. I don't think it's really done well for any investor that's bought it since it became a public company. And One of the concerning things right now is we're not hearing a lot from management. So we will likely get quarterly results later this month or early next month. That should give us a little bit more information about what their current finances look like. There was a share sale authorization that was available earlier in the third quarter. So possible that they raise a little bit of money through that. But like I said earlier, the stock price has gotten so low that it's not very attractive to sell new shares to raise money. I think they're going to need to go to alternative options. If they do that, we have seen in the past that this is a stock that could pop on positive news and partners actually backing Virgin Galactic. They've had 5 flights, 5 commercial flights into space now. So this is not nearly as high a risk company as it was even just 6 months ago, because they have demonstrated that they can get to space over and over again. The customers are willing to pay for that experience. I think those are all positive operational things. The challenge now is financial. Where does Virgin Galactic get $1 to $2 billion to be able to get to the point where they can build those Delta spacecraft and start flying on a weekly and daily basis? That is what we need to see from management. But give me your thoughts on Virgin Galactic. I know people have a lot of thoughts on this company and what they should be doing. Leave those in the comments section below. Don't forget to subscribe to Asymmetric Investing and check out fool.com/ASYM. If you're interested in some other high potential stocks from the Motley Fool, they've got a great track record. Got some more information about that in the show notes. Thanks for watching, everybody. See you here next time.